So it's banks like this that have been fairly typical in North America on the main street, or in the UK on the high street. But the traditional approach of banks to attracting customers, advertising and getting them, funneling them into a branch to sign a piece of paper and open an account, this way of banking is soon to be extinct. One of the great myths in terms of traditional bank account relationships or traditional day-to-day banking relationships is that a place like this has a special component or a special position in the relationship with customers. They can always come into a place to get advice from the bank. But really, ask yourself the question, when was the last time you went to a bank and you actually got advice? See, I believe that the concept of advice in a bank branch is pretty much a myth these days. Banking has become about efficiency, it's about handling transactions as cost effectively as possible. And while there is a metric around cross-sell and upsell, the likelihood of you actually walking into a bank place and getting advice, real advice that helps you to spend, save or live smarter with your money, I think this is pretty much a myth today. But what's the big opportunity? A lot of banks talk about this new emerging payments capability, being able to take your phone out of your pocket and use your phone to pay at a point of sale, or use your phone to withdraw cash from an ATM machine. But is the advancement in technology transactional in its nature, or is there potential to do more with your bank in terms of relationship and advice on the mobile phone? This is the big shift in banking and the day-to-day bank account as we move forward. So for companies like Starbucks today, mobile payments have already become a reality, with almost 30% of all payments in Starbucks today done via the Starbucks mobile app. Mobile payments, P2P payments, contextualization of financial services will result in a split from the traditional physical distribution structures and manufacturing components of financial services into two separate plays. So the traditional banks and incumbents who have owned this space in the past, because they've had the physical place, will actually be disadvantaged in this new era. Who's going to own this new distribution layer? Is it going to be the traditional banks, or is it going to be new startups, new players? Companies like Square, or even PayPal, or companies like Bank Simple, Move Bank, NAB. Organizations like this are starting to build that new distribution layer, contextualize financial services, getting rid of the friction of the physical place, the physical application form, and all of those rules and policies and processes that are embedded in the traditional financial services system. And this is resulting in a better end product for consumers. And ultimately, consumer behavior and the need for simplification of delivery of that product when and where you need it, the contextualization of financial services, is what will drive the fracturing of physical distributions and traditional manufacturing of financial products and services.